Hello guys, how are you? Hope you are all fine. So let's start the market structure and what is price action and how do we check the trends and how we trade. So let's start. If you don't know about higher highs and higher lows, don't worry, I will tell you in the course everything that what are these higher highs, and if you know, that's more better. As you can see, we have a bullish structure in the market of BTC here. We are making higher highs and higher lows. This is a higher high and a higher low, then again a higher high and a higher low, then again a higher high and a low, and then we make a new low. Whenever a new high or new low makes, it means we have a break of structure. Like if you see, this is a break of structure here, okay? Then again we have this break of structure. Then again we have this breakout structure. We are making new highs and breaking the last highs. So this is called breakout structure. And whenever in an uptrend we broke down and we make a new low, it's a bearish breakout structure. It is also called church. Okay, so here it happens. Now if you see to any YouTuber or anything on this pullback, they will say yes, we are going to 100,000 or $200,000. The BTC is going to a moon. But as a price action trader, I already know that yes, we have some bearish trend shift in the market and we can have a nice dump here, and we have these FVGs to be filled, these order blocks to be filled. What are order blocks and FVGs, I will tell you. Okay, so how we trade this or breakup structure? Whenever a breakup structure happens, we always know that we have some pullback. Never trade on these breaks. Okay, I always wait for a pullback because you short from the high and you long from the low. So that's how you trade. So I just mark my key levels, which is FVG and order blocks. Like this is an nice order block here. If you see the last green candle, and we have an FVG here, and the price came to my FVG, didn't touch the order block, and then we got a nice dump. So how we will know that it will go to the FVG and then dump, or it will go to the order block and then dump? So I will tell you how we will see these levels on lower time frames and how we will identify the trade, that where are we going. Let me show you the last trade I get on C98, and I just send it to my students, and they got a nice reward of that thing. Okay, so generally I mostly trade 4 hours and daily, and I mark my key levels on 4 hours. So you can see that drawing already. But if you see, we are going down, we go high, then we go again down, then we make a new high. Whenever I make a new high, we just get a break of structure, and a break of structure happens on 4 hour. Now we know that we have to fill these FVGs here sooner or later, so I have to watch for the pullback and I will trade it. So here if you see, we have a break of structure. Now whenever a break of structure happens, because this is the last high and this is the last low we made, okay, then we broke this high and break of structure happens. Now I will mark my order blocks and my FVGs. So I mark my order blocks, I mark my FVGs here, and then I waited for the price. If the price goes up, don't worry, don't be FOMO, don't long anything here. Okay, you have to wait for the price to come back to your FVGs or your key levels or the order blocks, and then simply go on a 5 minutes and check it that whether it's going to be bullish here or not. So how to check it? You just need a bullish break of structure on 5 minutes, and then you will trade it. Just like here, if you see, we have these highs, this highs, this highs, then we make this high, then this high, then this high, and then we broke this high. When broke the highs, it means we are going to be bullish on 5 minutes. And then when a break of structure happens, as I told, we always have a pullback, and then we go like long from here or here, whatever you want. I don't be going to long here because I need a transparency and credibility. So I will long here because the stop loss on price action in 5 minutes is too low. So just like here, we always go below the wick. Okay, this is the wick, just below the wick. Okay, because sometimes we get a wick and liquidate this short long ones, take out the liquidity, and then we go up. So here if you see, we are risking 1.4% and we got a nice pop of 4%. So what we do majorly, whenever we get our risk in the reward like 1.4% and 2% up, so I book 50% and put my stop loss on. If I book 50%, then I leave the setup whole. Like if I book 50% here on 2% and we got stopped out here, so this is no loss and no profit for me because I already booked 50% of the risk I have taken. And if I am going to book 30% or 40%, then I need to put a stop loss here. But I will tell you why you should not put your stop loss here, because we have FVG and other things, so we might touch it, and we touch it here, then it goes up. So here we have a nice 4% pump. Here you can book more, and then you can put your stop loss, and then the stop loss just hit, and then it goes down again, a new low happened. So as we know that we on 4 hour we have bullish breakout structure, and this is a pullback, and we are going to have a bullish move. So I will wait for the 5 minutes to just go up and give me another breakout structure to trade. So I will look only for longs. So here if you see, this is my last high, this is my last low, and again a breakup structure happens, and again we got a pullback. If you need more information, you can use trend lines like here. I use my Fibonacci retracement tool. I have some my own ratios on that which I use some trend lines, some patterns to use, as this is a trial class, so I can't tell you everything. So I will long it from here again, and then my stop loss is below this wick, it's my 2.2, and then again my target will be the same for our FVGs and order blocks or the breakup structure we got. So because as we know on 4 hour we are bullish, let me give you an example on 4 hour, that as we are bullish on 4 hour, we got a breakup structure, a bullish move, then a pullback. So here we got a breakup structure and a pullback, so we are expecting another high. So that's why my main target will be this, and you can go with the higher target also. So with the risk of only 2%, I got this move of 19% or 20%, whatever you can. So if you got a single move like this, don't worry, you don't have to trade the whole month. So that's how price action works, that's how you trade. Like if you go on BTC, USDT, and you want to scalp anything, you want to scalp on 5 minutes, like here if you see, we have these highs, then these highs we make, and then we broke these highs, then again we got a dump. We have a nice resistance here. If you go to long here, like if you mark this resistance, you mark it, you break this resistance, you long it, okay, here or here, whatever you want, you put your stop loss below this, and you will get your 1-to-1 risk to reward here. So you can see we have a nice pop of 0.61%, and then if the stop loss hits, no worries, you go again for the 5 minutes bullish breakup structure. And on the simpler way, if you stopped out to the downside, then a breakdown also happens here. Okay, you can see it, this was my last low and a new low made. So now I am bearish on BTC, so I am waiting for the pullback. The pullback happens here. Okay, I mark my resistance line and I am going to short it here again, because we have to play on both sides. You don't have to wait for the pump or dump. This is your stop loss, and you got a nice pop here with a 0.63%. You are going 3.2% short. Okay, so that's how we trade. I have a group here. If you see, and the technicals, we got some nice moves here. Like if you see, he's going nice. He got almost 294% pump, 31 to 30 risk to reward ratio. So that's how price action works, and that's how we do. He got this one. It was a nice trade on USD JPY. We trade cryptos, we trade anything. So if you want this to learn and anything, you can catch me up. So thanks. Hope you are good. Good wishes and best of luck. Thank you, man.